Welcome, everyone. Thank you for joining us at today's webinar. The next 3 to 9 months are going to potentially redefine the company, and we hope that translates into a lot of value for shareholders. I'm Ed Bereznicki, President and CEO, and joining me is Marc Junghans, our geologist. I encourage everyone to take a look at some important information regarding forward-looking statements. And as I move through that, should you have questions during our webinar, please enter them via the Teams format, and we'll address them at the end of the presentation. So the company, First Helium, operates in a multi-commodity region with exposure to high-margin helium-enriched natural gas, compelling economics. Well, we've got a tremendous number of high-impact prospects. We've also got a situation where the company currently trades at a discount to the implied value of its oil reserves. In fact, we're getting zero value to its existing non-producing helium and natural gas well and our high impact prospects. So we've got a major oil target identified on new proprietary 3D seismic. If successful, it would provide us with immediate cash flow. We'd like to test that anomaly this fall, along with some other high impact targets, including a lower cost horizontal well to test for regional play, and a second low cost well test, which would potentially extend the play over to the east part of our project. So the stage is set. At this point, investors would be investing alongside management and get the benefit of any potential successes from what we view to be some very exciting catalysts this fall. Given its location in geology, First Helium is an oil and gas company with exposure to high margin helium. We've got one proved undeveloped oil location where our third-party reserve engineer has given us proved plus probable reserves of just under 200,000 barrels. And we've also got one natural gas helium well that's not producing, where the same evaluator has given us unrisked best estimate contingent resources of just under 13 billion cubic feet of natural gas and just over 300 million cubic feet of helium. As I mentioned in the previous slide, we're only getting value for our proven undeveloped oil reserves currently. The area is a multi-zone drilling area for oil and helium-enriched natural gas. Anytime we drill a well, we get a look at up to 7 different productive horizons for hydrocarbons and helium. We've drilled 3 wells in the area, 100% drilling success on 2 oil wells. Those oil wells have provided us with $12 million in revenue over time that we put back into the company. We've also drilled a horizontal natural gas with helium well. As I mentioned, we'd like to complete that well this fall. So we want to talk to you today about a major project targeting light oil in the Leduc Formation and a premium natural gas play in the Blue Ridge Formation. In the Leduc, we've got a large anomaly to test. We've identified this structure on 3D seismic. It appears to be 5 times the size of our previous oil discovery, which was just under 300,000 barrels. As I mentioned, if we're successful in this well, we'll be able to bring that on quickly as we have facilities in the area, and this would provide us with immediate cash flow. In the Blue Ridge, we'd like to complete and test a horizontal well that we drilled about 18 months ago. If we're successful there, we set up for an area development plan where we see producing up to 30 million cubic feet a day of natural gas, or about 5,000 barrels of oil equivalent per day at 0.8% helium. That equates to about 250 100,000 cubic feet per day of helium, or 250 MCF per day. Just to give you an idea, Canada currently produces between 500 to 600 MCF per day of helium. So out of this West Worsley play, potentially half of what we produce in Canada. Our forecast well has very attractive economics, very comparable to some of the leading plays that various companies are chasing oil and gas for. The other thing we'd like to show you today is in the eastern part of our land base, we'll be testing a vertical well, which if we test that successfully, will extend that Blue Ridge regional play across our land map, all 53,000 acres potentially. With that, I'd like to turn the discussion over to Marc Junghans. Just a brief bio on Marc. He's been with us for over a year, brought on to help us evaluate both the Blue Ridge and also the Leduc plays. Marc brings 40 years of diversified oil and gas experience across the Western Canadian basin and into the US. He's worked in both public and private companies. Most notably Compton Petroleum, where he helped take the company from 1,500 barrels of oil equivalent a day to over 33,000. Also had some stints at Anderson Exploration and Husky Exploration, or Husky Energy, excuse me. He's been the founding member of numerous private oil and gas startups and has drilled many horizontal and vertical wells across the basin. Marc, over to you.
Thanks, Ed. Little pointer there. We'll start with an area overview here just to get you oriented. The gray squares here are one township, or 6 miles by 6 miles. The yellow is First Helium land, 100%. You can see what we call West Worsley and Worsley proper, or East Worsley over here. The green is the outline of our seismic, both trade and proprietary, 3D. Proprietary is the southeast portion of this seismic, 2 8 square mile 3Ds joined. What we have done is, as Ed said, we have a horizontal well that is drilled, has a liner set in it with 12 frac ports ready to go, where it's his horizontal helium target 5 of 27, and that is offset by 2 helium wells. These orange dots are wells that have tested helium in the Leduc, and the red stars are pools that have tested helium. Just to give you an idea, this pool here, which has produced 46 BCF of 1% helium, in today's assumptions would be worth $180 million NPV10. We also have an oil discovery at 1 of 30, Leduc, and another oil discovery on 3D at 429. I'll show you why 3D is important a little while later. We have a 15 of 25 wellbore here that's tested 1.3% helium at raw gas, 2 million a day, numerous tests. The red line through here is the gas transmission line, and we have access to that. And the area historically has been drilled by Suncor, Shell, Monsanto, Ken Hunter, Bonavista, and the drilling towards the east, where you see on top it says helium content increasing to the east, that essentially curtailed drilling to the east, because with helium came the nitrogen, and the gas could not make spec to go into this nice pipeline. So drilling started to slow down about right here to the east, where First Helium has 100% acreage in our 3D and this large feature that popped out. We also have infrastructure in the area. We have a battery and a water disposal right in here, right offsetting the oil wells. And what's kind of mind-boggling is if you take everything to the west here and add up the helium that is being produced historically, that is 1 BCF of helium that was not captured through the historical drilling of these pools. So that's pretty amazing. So we'll start with the Leduc play, which is the lowest play. Oh, sorry, back up for 1 second. This area is multi-zone. So we have production all the way from the zone sitting on top of the Precambrian called the Granite Wash, all the way up to the Dunvegan, which is a shallow Upper Cretaceous play. So we have production out of the Leduc, the Granite Wash, the Wagman, the Manville, and the Dunvegan. So we have a hell of a lot of zones here that aren't wells that aren't shown on the map. This is our Leduc play, which is the lower one. To the southwest or the left side of your screen is the area map again, showing our land with the transmission line and the outline of the seismic that I'm going to show you. And the black dashed area is the anomaly that we see. What we're seeing on the top right corner is the interpretation of our seismic showing the Leduc structure. Now the Leduc out here is a reefal complex. Just imagine you're in the Bahamas in the southwest portion, which would be the beach out here, and you're looking over and you're seeing the waves crashing into all the reefs out here. This is a reefal complex. The nice orange and white and brown are the buildups or the highs in the Leduc, and the blues and the light blues are the lows or the abyss. And as you go out here, you're getting into the deeper water. The yellow well here is our 1 of 30 oil well. The red well is our 429 oil well. And to show you how important 3D is, there's a well between those two that was wet right there. So it's 300 meters away from that well, 200 meters away from that well. That was drilled on 2D, and they got a wet well in there. You can see that we have a lot of locations mapped out here in the black, and of course, this massive feature that popped out. Visually, you can see it's at least 5 times larger that we have previously drilled. This is a well that we have proven undeveloped reserves assigned to it of 197,000 barrels. This blob here, combined with these 2 wells, is about 300,000 barrels. So you can see visually that it is quite a bit, this is quite a bit bigger than that.
So Mark, just to interject for a second. So we look at that aerial extent being about 5 times larger than our, roughly 300,000 barrel pool discovery. At today's net backs for light oil in the order of, $40 range, we can see that this becomes a pretty sizable feature potentially.
It's really big. It's a game changer for the company. I have seen a lot of seismic through my 40 plus years through Western Canada, and some plays do not lend themselves to seismic, but here we have a 1-to-1 match. We have 3D seismic matching the 2 oil wells that were drilled. We also have the 15 to 25 that I mentioned earlier that tested 2 million a day that sits over here that isn't on this map, just to make it clear on this. But we do have an anomaly there. So we have a match there, we have a match there, we have a match here. This is a 1-to-1 match on our interpretation of the seismic. This is all 100% first helium in terms of proprietary seismic. The land under it is all 100% first helium, and this monster popped out. So I'm going to take you through a little bit of the seismic of what we see. There's an A to B that you can see on here, and there's a white line going through. This is a cross section through the seismic, the actual data and the wells, and I'll show you what they look like. That's on the bottom right of your screen. So the bottom right, you see the 1 of 30 we talked about, that little pimple? That's a well that IP'd at over 400 barrels a day. These yellow lines are the faults in the Precambrian lying underneath that are the conduit for the helium to go up and be trapped in the various rock formations that we're seeing above here. The Leduc is the purple, then we see the Pekisko, and up top is the Wagman. So we're looking at the Leduc, the 1 of 30 well here. We see a little pimple that IP'd 400 barrels a day. Here's the well that tested water, drilled on 2D, the 3D, 200 meters to the west, gave you an oil well. And then if you go to the 429 right beside it, that was drilled on 3D also. There's a little pimple there. That's 300 meters to the east. And we got a well that IP'd over 100 barrels a day. Now you follow that seismic line. There are other features that we have locations on. But then you see that another low down here. This is an old well drilled in the 60s that tested out of the Leduc a bunch of water. And then this popped out of our 3D that you do not see on the existing 2Ds. You see hints of it, but the 3D, it just popped out. So visually, you can see how massive this is compared to what we previously drilled. The interpretation that we used on this part of the 3D is the same interpretation that we used over here. So essentially, we have a one-to-one match on our 3D in existing drilling, and what we want to do is drill this. This play has been as de-risked as you can up to drilling a well geologically. We have the seismic, we have the ties to the well on the seismic, we have confirmation of interpretation on the northwest, we have reserve otter actually giving us some reserves on an offset well on the anomaly. So we have this major feature that has not been touched. There are no wells into it in any of this in this circle or oblong. The closest well is over here, that wet well. What's really neat is offsetting this 3D, we see another buildup, hint of another one coming up. So the plan would be, what I'd like to do is drill that well, confirm hydrocarbon in there, and then once we get that going, we have all these other locations to drill. So we have, those are the 12 Ed talked about. Those do not include anomalies like this, which are very much like the anomaly that produced over 100 barrels a day. We did not include those in the 12 locations. We only high graded to the top 12. And now you see another anomaly popping out here. Off to the east and the south, it's all first helium land at 100%. So this is to be de-risked as much as it's going to be, needs to be drilled now. So next, I'll take you to the Blue Ridge, which sits on top of the Leduc. So we have a Blue Ridge play here. Ed has already talked about the horizontal that was drilled. I'll just take you to the map on the bottom left, sorry. Left bottom, again, land, same map that you've seen before. The horizontal is drilled here right by the arrow. And then we go 26 kilometers to the east, or 16 miles. We have that 1 of 30 well that's producing out of the underlying Leduc, but we cored the Blue Ridge, which has pay in it. We have hydrocarbon in the core, and we want to recomplete that well. Excuse me, I'm just having a little bit of trouble with my cursor. There it is. So we're looking at a completion of an existing horizontal, which has a liner in it. It's been drilled. We have frac ports ready to go, and an existing vertical uphole where we have core, and we've had a look at it. Now I'll take you to the actual well data. This is the offset well to the horizontal. There are 2 wells offsetting, this one with a red star and that one with a red star. And this is the horizontal here, 583 meters of horizontal section in the Blue Ridge. So this is a well log, the actual well between the 2 purple lines of the Blue Ridge Formation, which is a carbonate shelf, which is basically a pancake through the area. It exists everywhere throughout this area. So horizontal was drilled through here. This well produced, this is the interval that was opened. This well produced 0.6 BCF at 0.83% helium. You can see the results up here. So we have vertical wells, 2 vertical wells that we've offset. This well produced 0.1 BCF out of the Blue Ridge. And the horizontal went right here, right through the top. We know that because we have surveys and strip logs and all the nice geophysical and geological data that you get. Now, if you go 16 miles to the east, our 1 of 30 well, which you saw in the Leduc, uphole, we have another Blue Ridge. These railway track, the formations underneath and the formations on top mean we know exactly what's going on in between. Now, taking the same pay cutoffs that we used from the core, we have 20 meters of pay in the 1 of 30 well and 8.5 meters of pay in the vertical section of offsetting the horizontal well. So the plan is to complete the existing horizontal, take this vertical well, once the Leduc is petered out, and just perf and acidize this existing well here. So what I've done is drawn a pay map from the core data and the log data, and this is what you get. You get a little bit of a thin through here, and then you get really thick Blue Ridge around it. Now the entire Blue Ridge package is shown throughout the whole area, and it has been completed. These two wells, which I showed you previously, this well produced a little bit of oil, and these wells, which produced quite a bit of oil and gas down here just off of our land. So the development program, once you have completed this, flow tested it, pressure tested it, done a nice gas analysis of the well, is shown in the black here. So the black lines are the primary locations and the dashed lines are the follow-up. So we have a hell of a lot of locations here. This would be the first horizontal development program for helium and natural gas in North America. Now you go to the east, 26 kilometers, you go to the existing 130 well that I just showed you with the pay down here. We have the core. And what we want to do is recomplete that well. The pink triangles out here are wells that have shows in the wellbore through the strip log, through the geological well samples, the chips. So we have shows here. We have a show in 130, of course, the core. We have show here and a show here. So the plan is to just do a recompletion of this well. And then once we've confirmed again, pressure, flow, what we're getting out of the wellbore in terms of percent helium, drill a primary horizontal through here. We have the well control for targets. So we have that. And to help us along for structure, we have a 3D. We have a 3D over here that I just showed you for the Leduc, and we have a little 3D covering this area. 3D, you notice I have not talked about 3D on the Blue Ridge because seeing this pay zone on 3D is very difficult, but seeing structure is quite a bit easier. So we're going to use the 3D for targeting our horizontal. And the development program, again, like I did in the map to the west, I've got a development program set up here. So we have 7 primary locations over here, 14 over here. We have a full development program. Now, what this means in a macro sense is now you have a regional play. You have something that exists here and has production tested. Something exists here that you've tested in a horizontal and you have a flow test. And now you can put numbers to a horizontal and you can plan longer horizontals. Now you have a regional play in between, which is enormous for the company. So we have de-risked this as far as you can. We have a wellbore to the west. We have a wellbore to the east. We have seismic in the Leduc. This is about as de-risked as you can get. Just to show you a little bit further on what this looks like in the Blue Ridge. This is the horizontal. The Blue Ridge is in the pink. And the offset wells here that we know the Blue Ridge is there and is produced, and that one is produced. In a bit of a blow up, this is the horizontal well, the black, 583 meters. We know it's in the rock. Here's the 2 offsets that have combined for 0.74 BCF of gas, of 0.83 helium here, percent, 0.88% here. So a development program would include a lot of wells around it. When we have targets, we have vertical targets. So we have de-risked this as far as you can. And again, this is just where our 3D is. So Ed, sorry, Ed, I'll let you finish off that slide.
Yeah, so thank you, Mark. I touched on a few of these points earlier. Obviously, the West Worsley development stands to become a large natural gas producer at 30 million cubic feet a day. Again, if we're successful with the testing of that first well, and it will produce a sizable amount of helium given what we're producing in Canada today. As I mentioned, the potential of up to 40 to 50% should that play work out the way we think it will. Mark, you touched on a longer type well. When we do the economics on that well, we see rates of return, payback periods, and that sort of thing that are very comparable to what we see in some of the outstanding oil and gas plays that we have. So just to summarize today, the company's at a major juncture. The successful operation of the two operations that we've outlined today, if they're successful, they stand to play immediate transformative catalyst for the company, which is tremendously exciting. They set us up for a tremendous amount of growth. If we're successful in the Leduc oil, we'll generate immediate cash flow. If it's gas, as I pointed out earlier, we'll start to see pools potentially analogous to the successful gas pools to the west of the play, the D3D pool, for example, that Marc alluded to, upwards of $180 million in NPV for a two-well pool because of the helium content. If we're successful in the horizontal regional play, we'll establish a repeatable style play with a tremendous amount of expansion potential. The play will be largely de-risked, and we'll be able to, we believe, attract some partners that we've talked to previously. We're looking to diversify their traditional oil and gas revenue streams. So the heavy lifting is done. We've de-risked the operations. We control our land base. We've got infrastructure in place to bring on oil, cash flows immediately. And so coming back to the operations we showed you today, if we're successful there, we have the potential to unlock tremendous value for shareholders. So on that note, I will stop there, and Mr. Moderator, we'll take Marc and I will take any questions that you may have. All right. I don't see that there are any questions. So with that, I think we touched on all the key points we'd like you to today. Thank you to everyone for attending and listening in with us today. Tremendously exciting time for First Helium. If you want to check out some more on these plays or ask us any questions, please head out to our website at firsthelium.com and access us there. With that, I'd like to thank everyone again, and have a good afternoon, everyone.